blocks and IPOs, etc., supercharged.
Indeed. So let's straight away get to the big block deals. The most recent one was the one that we saw in VIP, where Multiples and Sancheti Brothers picked up about a 32% stake in Piramal's. But there have been so many others, and the IPO pipeline continues to remain red hot. So to decode the key drivers, the trends, the pipeline, we're now joined by Bhavesh Shah, Managing Director and Head of Investment Banking at Equirus, and Rahul Mody, Managing Director, Co-Head of Investment Banking at Ambit, joining in. Gentlemen, thank you very much for joining in. So just to first understand, the numbers in the first half of this calendar year, and what the numbers in terms of M&A and IPO pipeline that you guys see in the second half of the year. Bhavesh, you want to go first?
Sure. I think, Rima, thank you first of all for having me on the show. We are seeing a lot of activity across the board, be it IPOs, be it M&As, be it block deals. This is a investment banker dream that we are all living. We all grew up as analysts to where we are today to see this kind of an activity. But if you were to really look at it in terms of numbers, I think M&A was something like $25 billion year before last, but it's now become about $30 billion in 2024. What we are seeing is a multitude of game change in terms of optionality, which the companies have. Today, they can actually list the company. They can actually sell their stake through block deals, not necessarily through an M&A, but also an M&A is an option. So it's a multitude of options which is available for the companies, and that's how the trend is looking at in terms of numbers, etc.
All right, good to see you, Bhavesh, as well as Rahul. Thanks a lot for joining in. Rahul, let me come across to you. The recent few deals, SML Uzuzu, you have the deal in the paint space, Saxo Nobel, and recently VIP as well. All the three deals, well, they're viewed very, very positively, and they're large-sized deals as well. However, one would say that all the three deals got done at a sharp discount. How are you reading it? One would say it's good for the industry, good for the country on the whole. However, do you think some of these were distressed sales? The promoter entity out there was a little bit more desperate to get out of the business?
First of all, thank you for having me on this discussion. No, I wouldn't say so. I think each deal has obviously very specific deal dynamics. So I wouldn't generalize or say that they were distressed deals. Obviously, you have to consider where and I think a number of deals you mentioned are publicly traded, and obviously the markets and the valuations have been quite good. And it's quite normal for some of the secondary deals to be priced at a discount. So I wouldn't say so.
All right, Rahul, fill us in with your view then. How's the pipeline looking? If the markets remain very, very buoyant, then this deal street is likely to keep buzzing. Your take?
Absolutely. So, see, as Bhavesh said, I think we are seeing a very significant activity both on the M&A private capital raise as well as public markets, equity capital markets. The volumes on the M&A side have been quite robust. And I would say there are maybe identify four drivers for this. One, which is very basic, is I think we had great last year in terms of the equity capital market performance, but that was corrected a little bit earlier this year, initially because of this whole global tariff situation and a bit of geopolitics. And what that did is had some correction in valuation. Obviously, markets have gone up since then, but that makes the deals between buyer and seller and agreement on valuation more possible and pragmatic. So that's a very key driver, I would say, for M&A surge this year. Secondly, if you see, and in fact, you named a lot of the deals, but if you see one theme that has emerged is the large corporate houses have done, very meaningful M&A. So if you see, you mentioned JSW, ExxonMobil, Bajaj acquired Allianz's stake, Mahindras have done a few deals, Torrent did JV Pharma. So, there has been a spurt in activity from large corporate houses. Thirdly, private equity has been pretty active, both on investments as well as exits. And some of the exits have been through IPOs and blocks, but some have been through M&A and secondary sales as well. There has been focus on control deals from private equity. And it's not only the traditional private equity houses. You see real estate funds, infrastructure funds, pension funds, sovereign wealth funds also participate. And lastly, and again, that's something you touched upon, is that while even if they've corrected, the valuations are still good. So what we are seeing is, monetization by some Indian promoters or even foreign strategics. So you mentioned about VIP deal. We know the ExxonMobil deal, but there are a couple of Whirlpool is there. There is Novartis. So I would summarize all these four factors are contributing to very robust M&A pipeline.
I did a couple of these discussions, and we spoke with Ramdevji as well. And one thing he said kind of stayed with me. He said, well, so much supply essentially means that perhaps it puts a bit of a cap on the higher side. But a lot of the money which is being taken out, I'm talking about exits from PE, VCs, promoters, etc. A lot of it basically comes back into the market. So that kind of also provides some sort of a floor as well. So PE and VC exits last year were about 1.15 lakh crores. This year so far, this is till the 3rd of July, that number is close to about 40,000 crores. And of course, promoter exits 2 years in a row, 23 and 24, a lakh crore plus. And this space, we're at about 65,000 crores already. I think we'll beat the last 2 years as well. But I just want to quickly get for our viewers, Bhavesh and Rahul, right? As they say, buyer beware. Deals will come, and promoters and everyone will try and maximize. Where is all this stock going? It's going to DIIs, and DIIs are buying because they're getting all this money from retail investors, local investors in many ways. The quality of paper, I just wanted to quickly, if you both want to weigh in for 30 seconds each, Bhavesh, in this cycle where we are right now, what do you make of it? What's coming to the market?
So Prashant, I think it's a very fair observation, and obviously, great amount of activity happening, which also leads to a question as to whether it's really good quality paper coming into the market at the cost of the retail investors. But I must tell you one thing, is that the mutual funds, the institutional investors, that is, they have significantly upped their game in terms of the processes, in terms of the work and the diligence that they do in identifying the companies or where they want to invest, and the pricing as well. There's an extreme amount of discipline which is there. And I think it is but natural, because all these institutions have scaled up significantly because of the money coming in. Every mutual fund wants to grab a share of this 27,000 crores which is coming in. So they better be sure about what kind of companies they're investing in. Are they making good returns or not? So there's a...
Bhavesh, absolutely, point taken. But as I don't know if you heard Samir earlier, right? Towards the end, he said one thing. He said, because we are getting this gush of money, so anything we do, don't take that as this new kind of big view. You just you're getting the money, you got to put it to work. So while I take your point, but it is also just a function of the fact that you can't sit on cash. You're being given money, this gush is coming in, and you got to put that to work.
And exactly, which is why this supply of high quality paper really helps. And if I were to correlate this to M&A, for example, earlier a large stake sale in companies would invariably have to be done through strategic. Now strategics will try to really bring the valuations down, or kind of arm twist on the valuations. But now with the markets opening up, with the private equity opening up, the optionality of good quality paper coming at reasonable prices has also come up significantly. So the incentive for the companies to go for markets rather than do a strategic is there. At the same time, there's a good supply paper coming in, which kind of absorbs this liquidity in the market.
Rahul, have you seen a distinct increase in PE-led acquisitions or consolidation? So the most recent one was Multiples and VIP. Then there was Temasek-backed Manipal acquiring Sayadri. Before that, Bain Capital invested about 18% in Manappuram. So compared to the last, say, 3-4 years, have PEs become more active in India?
Yes, absolutely. I think, and it's been very steady. So if like last year, maybe just the PE investments were $30 billion. And we see this year tracking that and probably doing a lot better. As I was mentioning, we see a great level of confidence in PEs across sectors. They are willing to do more control deals as well as significant minority deals. And this confidence comes from economy in general, the business case of particular investments, but also their confidence in exits. And I think, as Bhavesh mentioned, you have multiple options to exit now. So we're definitely seeing that, and it has been across sectors. Consumer, we've seen a couple of very large trades like Haldiram, Theobroma, which got announced very recently. There are a few in pharma and healthcare, KKR acquiring HCG and so on. So other aspect of this is that it's not only the traditional sectors, but there is a lot of capital that is coming into real assets, so real estate. So Blackstone acquiring properties in Kolkata. Infrastructure has been very prolific for the last few years, and I see that continuing. As you know, there has been extension of certain tax benefits which are attributed to pension funds and sovereign wealth funds, which were extended by full 5 years in this budget. So that story is going to continue in every possible infrastructure, roads, renewable, digital infrastructure, energy infrastructure, and so on.
Yeah, I mean, that real assets story, right? It's very, very small right now in India. I mean, if you look at the sort of market cap of, say, REITs as an example, compared to how large that market is in the US. But maybe things will pick up on that particular front as well. We're out of time. I had a couple of more questions, but maybe we can request both of you to come back on the air. Bhavesh and Rahul, appreciate you joining us here on CNBC TV18. Thank you. We'll take a quick commercial break here. We'll come back. We'll have the management of ICICI Lombard join us on the other side. We talk about their quarter numbers and, of course, the outlook more importantly.